And that's a great strategy, because at the end of the day, you can even just tie these properties up with zero money down. You just tie them up, and sometimes it'll take you a couple weeks to get one property. The next one might take you 2 or 3 months. But once you start accumulating these properties, that's the beauty about real estate.
Thank you for everyone to join this Wednesday webinar. This is all about real estate investment in the right way. And our goal here is, as I always share, is real estate investment webinar. We try to help you to understand what's going on with the market, and possibly and hopefully we can get hold of the real property. And the whole idea here is, at the end of the day, to make money, and there are different strategies to do that. Now, the goal here is to move you, or to help you to move from wherever you are as a speculator to a savvy investor, and doing things that you're going to see slowly by time, that some of your vocabulary, such as I hope, I wish, I guess, would or assume, would eventually change to relying more of numbers. So when you come across in some media, you are reading between the lines. Now, here is the situation of a real estate investor that just started, blowing to the right and left by all the information, all the news that, or just talking to anyone that you are doubting, you're guessing that might be the case. And the whole idea here is eventually to help you to create your roadmap, what you want to do, the timing, the investment kind of things you want to do, and the path that you choose for yourself as a different strategy. I want all of you to go on Ashton TV or Ashton YouTube, and there are, as I always say, there are a lot of resources for you to learn how to master your real estate investments. Matthew is going to come up. He's going to share with us some of the experiences that he has in terms of making good deals. Meanwhile, I'm going to, as usual, tell you what's happening in the market right now. This is the housing market. It's very important. Now, today I pull out this information, said mortgage deferral data can paint clear picture of future. Bank of Canada say that, and all of you, you know that some people, they put mortgage deferral on their mortgage because of COVID-19, and many people thought that by September, when the deferral would be ended, we're going to be in chaos in real estate market. Well, that was not happen. Now, some of the deferral were due in September, and not all of them. So that's why the Bank of Canada is a little bit not confused, but hesitant to forecast and to tell us what's going to happen soon. So everybody's waiting and to see what's going to happen. If all of the mortgages come back and people start paying, can they pay? So far, there's not much foreclosure anyways, I see in the market. So you're doing good. Now I pull up this stat for you, this information, and regarding the housing market in Ontario. It's coming out from Toronto Real Estate Board, actually, it's going GTA. We see the home comparison compared to any other year. As you see, the month of October, the market was very high, and it was very active comparison. Now, this is sales to new listing ratio. It means whatever it comes to the market, would it sell or not? So far, I want you to pay attention to what happened between September, October. As you can see, the orange line represents 2020. It was higher in September, but then in October, it went down. That clearly shows the market changing from a seller market to a buyer market or a more balanced market. So that is a good indicator for you to, when you get into the market, what to do. All right. So here, going back here again. So you might, in October, for instance, you might be able to ask for conditions, mortgage conditions or inspection conditions. So the market eased a little bit. Resale price went down. No, it didn't. In September, October, solid. It continued going up. And I pull up this one as well for you. Residential transaction over a year. In October, month of October, 19 compared to 2020, we had 25.1% more transaction. Now take a look at the average selling price last year compared to this year. Of course, went up 13.7%. Listen, buddy, this price is continue going up. Don't look at the small hiccups we have here and there. This is real estate. What else you expect? So if you can get something for less, jump on it. Of course, price is not the only criteria when you choose your property. And we are going to have a conversation with Mathieu. The topic today is the art of real estate deal making. You all know that Mathieu is from Ottawa. He does a lot of activity in the US now, but regardless whether you do it in the US or in Canada, there are techniques and the strategy that any real estate investor can use and will be benefited from other people's experiences. Mathieu, I put all the information about Mathieu here. If someone wants to write it down, contact Mathieu later on. That's fine. Mathieu is very active in, he's from Ottawa and he's very active real estate investor. He has his own company called Mada Partners. Now it's time for us to check if Mathieu's voice is.
Can you hear me now?
I cannot hear you, Mathieu. Maybe, let me see if there's anything I can do at my end. But you go
All right,
ahead.
guys. Well, Ashton, thanks again for having me on your webinar. So basically, Ashton wanted me to share my story of kind of how I started in real estate and the types of deals that we're doing. So I'll start with the deals that we've been doing here. So again, I always like to start with a disclaimer, just say that, the information I'm going to provide tonight is, do your own due diligence, talk to your attorney and so forth. So if you guys don't know me, so my name is Mathieu Laquerre. I'm the managing partner of Mada Partner. Basically, we trade under a few different names. We got the Mada Partner, Wealthy Lawyer, Find Your Strategy. They're kind of different brands that we're working on. I've been doing this in the US now since 2015. This year, we've had a little bit of a setback with COVID. We're only on track to do around $4 million of project, but next year, we should hover around the $8 to $10 million of projects if we have no construction sites shutdowns like we had at the beginning of the year with COVID. So basically what I do, we're a real estate private equity firm and syndication company. We're looking to grow with partners. We basically invest anywhere from rehabs to new construction, multifamily development, 70 units and up. We mainly invest in distressed properties. We find it's a lot better. We can add a lot more value and we get a higher returns for our partners. And we're mainly focused in the Philadelphia market at the moment. And we're actually developing other projects in different areas also in different states. But for now, our main focus with our investors is Philadelphia. We have a simple strategy. We basically have around 4 ways that we kind of generate income for ourselves. One of them, and I'll go through all these projects after. I'm just going to do a brief description of what we kind of do. So the first one, we do shovel-ready projects. Essentially, we get the plans in place and the permits. We actually don't build, and we just sell those off to other smaller developers or other people that want to develop properties that are new to real estate. So we take a lot of time away and we save a lot of time, for them.
Mathieu?
Yeah.
Okay, so you can hear me now?
Yeah.
I can hear you, perfect. So this shovel ready, is that kind of assignment or is that flipping? What is happening here?
So I'll talk to you guys about that in the next slides, but shovel ready, essentially we buy the land, we own the land, we go to the city, we get the permits, the engineering plans, everything, and we just sell it off to another investor that wants to build on it. So we don't take the risk on building and we're just selling it off, and we still do pretty well on the exit on stuff like that.
Perfect.
It's funny. It's part of one of the strategies we have. Sometimes, we want to build these things, but other investors come in and say, hey, I'll buy this off you. And if the price is right, we'll sell it to somebody else and make a decent return on it. Building the block. So this one's a really neat one that we really like. We basically, borrow the value from the good neighborhood and move it line by line, one street over to one street. And it's pretty interesting. I'll show you guys that in the next slide. Rehabs, kind of what you guys see on the HDTV. Sometimes it's a little bit complicated, a little bit longer than what you see, but we do quite a bit of those. We've got, I think, 7 or 8 currently on the go. And we have facelift. Essentially, we'll use old buildings and repurpose them and build something with them. And I'll show you guys that in the next slide here. 1 second. I don't know why my computer's being slow. So building the block, basically, it's pretty simple. It's a pretty easy concept. So basically what we do as a team is we go in and we buy a lot of property. We just don't go in and buy 1 property, 2 properties, 3. We'll buy 10, 20, 30, and we'll start doing a lot of projects. So if you kind of see here, this is one neighborhood that we were very active in. And what we essentially do is we're usually the second movers in a neighborhood, second or third movers. So essentially we're just following what other people are doing, and we're just land banking, and we're just assembling as much land as we can and redeveloping it. So this is one that was pretty nice. So this one's in Philadelphia on North 27th Street. So essentially, this was the this is what the property looked like. There's some vacant lots of vacant properties. And then what we did on this one, we actually did a land assembly, and we actually built. You'll see here on the right, we actually built two 6-unit buildings. We did some new construction, also townhouse on that street. Basically, the nice thing about this project, actually, hold on a second. I think I got the wrong. So basically on this project, we invested, our investors invested $324,000 into the whole project. We refinanced it, and they received more than $306,000 above what they put in on the refinance. So they made a return of roughly 54% over 18 months. And this is a project we did a few years ago on this particular street, which was quite interesting because before it was all dilapidated properties where you and I would never live in, or we'd never be in that neighborhood. This one,
by the way, Matthew, just to relate things that you're saying, it's not only for US, for our audience. We have land assembly here, happens very often. Like I can remember in Young and Shepherd neighborhood, what some people they do. You don't need to be a real estate agent. As long as you have the mindset to do that, you can just knock at the doors. Like you see 5, 6, 10 homes in a row, bungalows kind of ready for tear down condition. You just knock at their doors, try to talk to the owners. Maybe you can buy them and kind of assemble and sell them to the builders, and they would go for it. Go ahead.
And that's a great strategy, because at the end of the day, you can even just tie these properties up with zero money down. You just tie them up, and sometimes it'll take you a couple weeks to get one property. The next one might take you 2 or 3 months. But once you start accumulating these properties, that's the beauty about real estate, because you can definitely make a healthy return with not a lot of energy doing this process. And we've done that too in the past, where we just bought a whole bunch of properties, changed the zoning on it and sold it off to another developer, and we made just as much money doing that than even developing the property. So this one's an interesting one. So this one's on Marsden Street. I wish I had a better picture of before, but literally this was a 2-story building that we purchased. And it was an old mattress warehouse, and we ended up converting that to a 6-unit building. And that's kind of what it was supposed to look like with the renderings and everything. And the beauty about this building is we kind of give it kind of like a New York style feel. There's a lot of graffiti in the building, so we actually kept it inside to kind of give it a bit of a charm and a little bit of character. This is the final product, what it'll look like. The neighborhood's changed a lot. There's some construction going around it right now. So on this particular deal, it was quite interesting. So we were building it, and we put in $150,000 of our own money in this deal with our partners. And originally we wanted to keep it, our exit strategy was to keep it for 6 to 10 years and sell it off. And we had a few, what we call them cap rate investors that kind of came by, and they wrote us a nice check for the building without really owning it for a long time. So essentially we held this project for literally 14 months. And then we exited with $103,000 profit on our capital on this one. That was one of our biggest home runs, I would say, in real estate in Philadelphia, because we didn't really hold the asset for a long period of time. We actually sold the company that was holding the note on it, so that we didn't really pay a lot of taxes on that transaction compared to regular real estate taxes. Now this is the fun one that you guys probably want to hear, the shovel ready project. So this one right here was Taney. So it was 1220 North Taney. It was supposed to be a 2-unit condo building that we were gonna build on this street, and it's right beside a commercial corridor that our partners are very, very active on, Girard Avenue. The beauty about this particular project, you can see here, so you got the top and bottom unit. So we got the plans and permits in place, and we realized that we didn't want to build this thing because we didn't think it was going to look nice anymore. So we had an agent that deals with a lot of developers as part of our team, and within 2-3 days we had this under contract and we sold it. And this is where the beauty is about doing these small deals, and you can do them in Canada too. So we basically put in, on this particular deal, we put in around $75,000 of our money. That includes the permits, the plans, everything. And we're able to sell it for $125. So basically made almost a 40% return in less than 7 months on this one right here. And that's the finished product that the other developer did inside the unit, the pictures that I'm showing you guys right now. So Cabot Street's almost the same thing. This one was a pretty interesting one. So this was a fairly big size lot that we had. And as we went to the city to get permits and plans to develop this house, to do a house, a 2,500 square foot house, it's considered big for us in Philadelphia. The homes are a little bit smaller than that. The beauty about this one, it had a really, really nice big backyard. We only put in, again, $75,000 into this project, and we were able to sell it for $137,500, and we sold it and we made a profit around $55,000 with a 74% return. The beauty about this one is, again, it's another developer that did the project and actually created the highest comp for us in that neighborhood. So this project sold, I think, for $525,000 around a year and a half ago. So that was a nice one for us because we were able to increase the comps in that neighborhood, and we didn't have to do it. We let another developer do it. This is another strategy that we kind of use. This one we call it the facelift. So this particular unit was basically a commercial property with some vacant units at the top. So we basically put 3 one-bedroom units onto this one. This is probably the worst project that we've ever had to do. A lot of delays. The beauty about what we're excited about this is that there was a vacant lot beside it. I wasn't part in that project, but my partners were, and we knew that building this building and having another building that was worth around 10 million beside us, we would just increase the value of this neighborhood. So it was a retrofit basically for 3 residential unit. That was kind of the schematics, what we were hoping for it to look like. So we did, high-end finishes on this particular project again. And we just sold this one right before COVID hit at the end of February. And, we put in $120,000 and we received 85,000 back. It wasn't the greatest because this one took a lot of time, around 3 years. We had around 11 months, 12 months of delays on this one. But as you can see, we were happy to exit. And I think on this particular unit, we were extremely lucky to sell it right before COVID hit, because I don't think this thing would have cash flowed with this tenant inside during COVID. So we sold that to another investor. So this is kind of like the smaller stuff that I kind of started doing. Here's another project that we actually got the demo permits today on. So these are similar to what you guys would probably see in Toronto. So this is 6 luxurious townhouse in Philadelphia. So essentially what we're doing on this one is it's a whole development on a street. And the beauty about it is that it's on top of a hill. So this is kind of like a legacy project, I call it, that I think will be very, very nice for our company. So I'll just go through a little bit why we're doing this project. So we pulled some comps in the area for this particular project. So we're building it we're estimating to sell it for around $950,000 a unit. But if you look at the comps for similar houses, they go from 1.5 to 1.2 million. But we believe that our sweet spot's going to be around $1,050,000, maybe a little bit more. But the first 2, we know that we're going to probably sell around the $1 million price point. And that's one thing that I like about the US, is to do a project like this, you don't need as much capital as you would need in the US. I'm sorry, in Canada. So I'll just run through the comps here with you guys to give you a little bit more in depth on kind of the things that we're doing. So our estimated first couple, we're going to sell them for around $950,000, if you see here. And if you look at the average sell price in the area per square foot, was a little bit higher. But the way we run our numbers, we're ultra conservative on the numbers, just to make sure that we hit our minimum targets of around 20 to 30% on a project of this scale. So again, there's another rendering. So this is some of the renderings that we have. So you're going to have a double car garage. And in Philadelphia, these types of property with the off-street parking are not rare. They're fairly rare. But this particular project, we think we're going to hit a home run, just because it's 24 foot wide, the lots for the homes. And you can put a nice property on that one. Sorry. So essentially, if you look right here on the left, it's your 2-car garage. You got your first floor, which is kind of like your kitchen, living, dining room. Your second floor, or your 2 bedrooms. And then on the upstairs, we kind of call it the guest suite, the master bedroom. And then the beauty about a lot of the homes that we do a nice rooftop patios. So they overlook, especially on this one, because you're above the city line with on that hill, you can see the downtown of Philadelphia on it, with nothing blocking the view, I should say. So we're really, really excited about this one. And we start demo on Monday. So just, again, more renderings of what this is going to look like. But just to show people that, these are our numbers. We're going to build this in three phases. So we're going to start by doing 2 as kind of like one. We're going to use it as our sales office. The other one as as our test for the market on that particular unit. So if you look right here, give or take, our average cost is going to be $1,025,000. We're hoping to sell the project for over $6 million. So we're hoping to have a pretty decent return on our money on that one. So I just kind of kept it short because I know last time I kind of talked a lot, and I just wanted to show you guys a little bit of the deals that I kind of started in real estate, and I thought we kind of open it up a bit and talk about things that you can do, and you can replicate this model easily anywhere in Canada. It's just you got to think outside. You got to think outside the box to do these types of deals, and when you're doing land assemblies or repositioning a property to do something else with it.
Excellent. So shovel ready, that's the expression you use. Basically, basically this is upgrading any properties that you take over. So it could be a bungalow, could be a multiplex, correct?
Exactly. It can be a multitude of things.
So basically what you do, I think in the US they call it from D category, move it to C or B or A category.
Exactly.
Is that what you're actively looking for in the US?
Exactly. We're basically investing in neighborhoods that are kind of upcoming. So it might be a C or D class, but they're bordering like an A class property. So what we do is we borrow the value from the nice neighborhood, and then we just start doing it one street at a time, one block at a time. And that strategy's worked really well for ourselves, for other people too, in Philadelphia. And I think that's one thing that we always get scared of sometimes is, being the first mover or taking the risk. But if you see the population growth, if you see, underdeveloped neighborhoods, this can easily happen to any neighborhood in any market.
So Matthew, based on what you said, like all of this added value activities that you do, basically that's what you do. Even like a facelift is adding value, cosmetic very much. Because you just change the outside. These all require a big team in different cities to not only spot a property, but also do evaluation and analysis of if you spend $100,000, would your value, can you sell it for profit? All right.
Well, I think when we buy a property, we make the majority of our money on the buy. And also we have an advantage too in Philadelphia for the product that we're putting out. Our cost of building is very low. And so we're building, when I first started, we're building at around $97 a square foot and selling for $210, $220. Now we're building for $117 to $130 and selling for $240 a square foot. So the thing that I always look when you do these projects is you want to make sure there's enough skin in the game that if you have to do a refinance as an exit strategy and hold on to the property, you're able to come out of it on top. And that's kind of the way when I first started investing in these types of neighborhood, I always look, okay, we're putting X amount of money in, and how much money can I pull out on the worst case scenario? Or if I'm making a 5-6% cap rate for a year or two until I can pull my money out, I can live with that, And
MADA Corporation or MADA Partnerships doing all of this, right?
Yeah, our partners. So we don't do any of the permitting, the land development. We just partnered with a developer. They're our boots on the ground for us. So that's essentially what we do is we just provide them the capital to do all the work. And then we partner on these projects with them.
Is there any scales in terms of budget? Not budget, don't get me wrong. The project, the cost of projects. Let me give you an example. If someone comes to you and said, listen, I'm buying this for 120, is that something you're interested, or it has to be over, let's say, $800,000 and above? That would you find interesting?
So it all depends how. It all depends. Like, look, we have small deals where we're doing $300,000 properties, and we're doing bigger projects. Like at the end of the day, if the returns are there and the yield is there, we will do it. Like I'll give you an example. We're developing a new section of Philadelphia. We're doing a couple flips in the area. We're doing a 22 unit apartment building on that. We're still in the planning phases of that neighborhood, but we like the small project is a $75,000 investment. The land assembly that we're doing is around a $600,000 land assembly for us to build that 22 unit building that we're currently working on.
Are you actively looking for this kind of deals in Canada, in Ottawa, in Ontario?
Not really, to be honest with you. We are mainly focused on the U.S. I used to be involved in the Canadian real estate market. With COVID and everything, I started looking at doing some type of deals like that. But I find the land is very, very hard to come by. Very hard.
How many lands you want, Matthew?
Pardon?
I said, how many lands you want here in Toronto? I can give you many. But so how many deals are you working on right now? Like how many projects?
Right now I've got nine on the go right now.
And they're all in same state?
Yeah, all in the same state. Yeah. I've got 9, and we've got around 4 or 5 that were in the planning phases for our company, and my partners have probably another 20 or 25 on the go.
You have a team or some kind of people looking for this kind of deals 24/7, right?
Exactly. So when there's always people know that we're active in the neighborhoods, we work a lot with wholesalers, even a lot of agents. Will we get deals all the time. I would say like, you probably get 1 to 3% of the deals that are good. But we do get deals all the time.
So there are people there doing analysis, make sure it's making money, and then you jump on it. Now, between all of this strategies, which one is your favorite money-making one? You call it shovel ready, you call it building the blocks, or facelift?
You know what? I think we're always. I like all. There's not one better than the other. The one thing that I like is I like to see the final result of a building. I think that's the more exciting part of being in real estate. But we always look at what makes sense with that property. You can't get emotionally attached to it. Like that facelift project that I showed you guys. I never wanted to sell that project, but we had three offers on that building. And we weren't even selling it. The first offer was $65,000 profit. The second one was 85, and then the last one that we finally agreed on all the terms, we made 103,000. So I couldn't pass it up. And when I looked at the numbers, it would have taken me around 7 years to get my cash flow, and I got it in 14 months. So it was worth the effort on that one.
Excellent. So just a recap for our audience. As we all know, and Matthew is a testimony to that, there are more than one way or two ways, or there are different ways of making money in real estate. It's not always traditionally, that's what I practice, buy and hold. It's not always buy and hold or flipping. When you open your mind and you attend different seminars or having conversation or training, there's facelifting, for instance. I know facelifting happening in Toronto a lot in commercial area. The red old dirty brick of a plaza all of a sudden is facelifted by beautiful signage, and that add the value of the plaza. In terms of upgrading, moving from Class D to Class A, I see that for last few years we have that one in Hamilton. A lot of places in Hamilton, they did that upgrade, and many multiple residential or mixed-use properties in Hamilton change as well and make a ton of money for so many people. We have odd situation here and there in different cities. Toronto is still a very, very hot area. What's happening right now in Toronto is there are a lot of people going through permits to change the garage, which is a separate garage from the building, and convert that one to a 2 or 3 stories. So that's a new trend that I see in Toronto happening. So because they need room for people to live in residential area. So one thing I find it tricky is you cannot really apply, let's say, the facelifting strategy to the entire city. So if you open map of Toronto, let's say GTA, and say, you know what, this is what I'm going to do. Okay, you can do it, but don't think this facelifting apply to every part of Toronto, and that would bear the same return for you. So I think you have to really know the city. What I find, what Matthew was sharing, and Matthew, correct me if I'm wrong, in this strategy that what you're doing, you need to actively looking for opportunities. You have to have a good connections of people who are doing the research, because after all, you don't know all the properties in, let's say, GTA. So you need people that can help you. You have to have your crew, and you have to have your investors connected to you. Then you can start picking up projects here and there and grow. Am I right?
Exactly. And I think the key of doing the strategy too, when you're kind of you got to make sure that if you're going to do this type of strategy, you can't just do one or two. You got to do multiple, just because that's when you start making a bigger impact, and that's when you start getting, you creating your own comps in the neighborhood and so forth. Like right before COVID hit, right after the recovery from COVID, because we were 3 months of not being able to build or sell properties in Philadelphia and in this neighborhood that we were very active. Like we were the highest comp I think was 225,000, and we just sold a couple properties at 300,000, and we're slowly and surely bringing up those comps, and we have a whole bunch of development planned for that neighborhood. And we know that, what we're putting out on the market, we have another 4 or 5 of those hitting the market in the next 2 weeks. And we want to make sure that before we start digging on other projects, we want to make sure that it can support it. And so far, for what we're doing in this new neighborhood, the results are better than what we anticipated, which is pretty awesome.
Excellent. One of the things I see here happening for last many years, not only in core Toronto, downtown Toronto, but also a little bit all around, is buying bungalows or older homes, like 5 neighbors, 10 neighbors all together, and assemble it, as you said, as land assembly, we call it, and approach the builders and offer it to them. So that's happened in downtown Toronto, but we're dealing with bigger budgets. We're talking about $300 million, for instance, anywhere between 100 million to 400 million dollars worth of properties or land. It's very expensive. If you come outside of Toronto a little bit, let's say north of 401, for instance, you can do that land assembly. But as I said, you'll really have to target that area. One of the hints I can give you is to go around GO train or subways in the older neighborhoods that is hot and active, and attract builders and find those lands. If you find some of them, let me know. I have builders that can take over and demolish basically that area and build their high rise there.
It's funny because look, there's a neighborhood that they just added, because they see there's us and another developer. They're pretty active in that neighborhood. They're actually adding better bus service and so forth, which is making it better for us too when we're redeveloping these neighborhoods, which is good. We get the support of the city that way too.
Absolutely, there are a lot of infrastructures. That part of the city would change eventually. This is what I do always. Land assembly is not easy to find them, but once you find them, it's very profitable.
What's the process in Toronto? Is it a long process to do some land assembly, like to change the zoning and stuff like that? Is it a long process for you guys?
It is a year or 2 years at least, changing the zoning from residential, sometimes mixed use. And then you have to estimate how much you can put in there. Those properties we're talking about putting at least 1 or 2 towers. That then once you have it secure, then you can approach some of the big builders in Toronto and offer them the land. Then goes the negotiation. Many times they would handle because they have connections to the city. So what I would do, I would find these properties and I do my land assembly. And then once I have the package ready, then I would approach the builders, tell them if they are interested. Of course, there's always many other equations into this kind of deal, but it's a sweet deal.
Yeah.
Excellent. Anyone has any questions for Matthew? Okay, I think that. Hi, Lola. Go ahead.
Hi. Now, what question I was going to ask was, with like a kind of Canadian, how easy is it for a Canadian to buy like a real estate, like a multifamily home in the US?
So there's a couple ways of doing it. We just have a team in the US. We partner with them, and they'll go and they'll sign the bank note for us. So that's kind of how we set it up. We find it's a lot easier that way. We're partners in the deals. There's another, so that's when we're 50-50 partners. If we own 100% of the project, my developers, my partners down there, they'll charge me around 1 or 2% of the loan, depending on the type of property. So let's say it's a $2 million mortgage. Well, they'll charge me between 1 and 2% to sign on the loan for me. But it all depends. If you're also, some banks will still lend to Canadians, but the terms aren't really good because they can't, it's a non-recourse loan. So they're going to ask for anywhere from 50 to 60% loan to value, which for us makes no sense because we just want to rinse and repeat this as quick as possible. So it really depends where you're investing to. I know it depends on some states, like in Florida, RBC, Desjardins, and I forget what other bank. I'd have to go look through my notes. They will give mortgages to Canadians, but it kind of has to be for a secondary residence. So I think it'll go up to 3 units maximum on something like that, and basically the same terms of loan to value ratios that you'd find in Canada through those banks in Florida.
Excellent. And Matthew, if someone wants to come through you, connect with Matt, the partners, how does it work?
So essentially, there's a few ways they can partner with us on the development with our partners in the US, and or they can just, we're working on something right now and I haven't finalized it. We're actually going to be able to use RSP money soon to invest in the US. And also we're going to be creating personal pension plans for people that have their own corporation and they're getting paid by their own corporations too. But essentially the model that we like is we like to partner with people in Canada. We'll put our money with you in the deal, and we want to make sure it's a success with our team down there.
And what kind of money input are you looking at here? Just give me some idea.
So our minimum buying, but we're starting to do bigger things now. Our minimum buying used to be around 60,000 US. We're probably going to up it to around $80,000 in the new year, just for the types of projects we're getting involved. They're getting a little bit bigger, and we just want to keep it that way.
And is there any guesstimate time, like $80,000 come in, and then the return is going to happen in 3 months, based on your experience?
It all depends on the type of appetite our partners want to do. So we have our typical project on the short term. We'll say 7 to 9 months. We always say you got to look at it on the worst case scenario, 12-month exit on it. But there's some short-term opportunities. Like there's a project we just put in, I think around $100,000 in it. Sorry, $120,000 in it. It was to do a different 6-unit development and that was 3 months ago, and I just got bought out of that project without even building it, and I made 15% return in 3 months. So I took that, and I'm like, it's, you know, we're more conservative right now with COVID, so I would have probably liked a little bit more if COVID wasn't involved, but I'll take the 15% return in 3 months work all day long.
I'm with you. Sounds good. Any other questions? No. Well, Mathieu, it was a pleasure for us to have you back again. We look forward with all your creative deals putting together that you are doing in the US. You do a fabulous job, and hope to have you back here.
Perfect. Well, thank you for having me tonight. Have a great night, guys.
Yeah, thank you. Take care. Take care,
Take care.
everybody. Bye-bye.
Bye-bye.